Good afternoon, my name is Payman. Today I would like to give you some information about money and capital market, which are two different types of financial markets. First of all, I'm going to start with money market. Money market is basically dealing with borrowing money to someone for a short period of time, while the capital market is vice versa. It's basically for borrowing money to someone for a longer period of time. So let's start with the money market first and go through its details and including the risk, the interest rate, participants, and the issuers of this loan. So first of all, I'm going to speak about the first instrument of the money market, which is including Australian Treasury notes. It has been issued by Australian Treasury, and this bond is basically almost risk-free because its interest is not very high. Its maturity time is between 30, 60, or even up to 90 days. The next instrument that I'm going to speak about is BABS, which is standing for Bank Accepted Bills. It's also part of the money market. It's regarding a promise that given to someone regarding guaranteed payment through the bank. So it's kind of bound with a lower risk, and it's basically depends on the type of the guaranteed that has been given, that has been set up between the person and the bank. Its maturity time is between 30, 90, and it can be even up to 180 days. So it's basically greater than the previous part that I spoke about. Its interest rate is between 2.02% to 2.24%. The third element that I'm going to speak about is also about negotiable certificates of deposit, which is NCDs as well. And it's also part of the money market. It can be issued by money center commercials, and its risk is basically depends on the strength of the issuing bank. It can be varied, and also its maturity period of time is within 2 weeks to 1 year. And if I want to talk about its interest rate, it's almost same as BABS that I spoke about, which was 2.02% to 2.24%. So the fourth part of the money market is commercial paper. It can be issued by financial firms, and it's basically low risk, and its maturity time it's only up to 270 days, and its risk is varies depending on the level of the risk, uh, and the amount of the money which had been borrowed from the bank. So they all can be varied. So the fifth item that I would like to speak about is money market managed funds. This item is also, it has a low degree of the risk, and it doesn't have any maturity time. It can be redeemed anytime, which is a convenient, and it's a low interest rate, and and because of that, it's as I said, it's one of the lowest uh, item of the money market in terms of the risk and the maturity time. So the last part of the money market that I would like to speak about is the consumer credit card. It's basically for non-mortgage consumers. The risk is variable to the amount and limit of the credit. Also, the maturity is also varies. There is not any limited in advance when we are talking about this, and its interest rate is also variable to a couple of items like uh, the limit of the credit card. Now let's speak about capital market. It involves four different instruments. Uh, First of all, I'm going to speak about Australian Treasury bonds, which is part of the capital which is part of the capital market. It can be issued by Australian government, and in terms of risk, it's not very risky item. Its interest is also between 1.99% to 3.35%. The second part is mortgages. It can be borrowed from commercial banks, and it's not very risky as well. And it can be borrowed up to 30 years, and the interest rate is between 4.0% to 5.0%. So the third part that I'm going to speak about is semi-government bonds. It's riskier than Australian government securities, so it's quite risky, but it can be borrowed up to 30 years. And also the last part that I would like to speak about is corporate bonds. It had been noticed riskier than any other item. It's basically riskier than preferences and ordinary shares, but there is no certain information about about this market because regarding its maturity time and interest rate. So I cannot provide any certain information about this, and I hope you have enjoyed this video.
Hello everyone, my name is Maggie. Thank you so much for Pamela's introduction about both money market and capital market. He has talked about both market risk level, the interest rate, and the original maturity. Now I'm going to talk about which category is better for a company's financial business strategy based on our current business situation. Our company is a financial technology company with a large market capitalization over 13.7 billion. Our share price customer base have experienced fast growth during this global pandemic. So actually, our company is playing a leading role in this online payment industry. We just think about this special period, all the retail stores, shopping malls are locked down. The consumer couldn't go out shopping outside. So online shopping would be the only choice for all the consumers. We, as a financial service company, definitely this will be a good opportunity for a company to do big expansion as soon as possible. Furthermore, we also think about consumers. They are easy to accept new payment service. They would like to spend time at home for learning new knowledge for the payment service. This also could save a large amount of cost for marketing. When we think about the financial industry, we all know the financial industry has been changing very fast. We should catch up this opportunity as soon as possible. We can't wait for longer term or long-term instrument. So how to raise funds in a short term to set up a new business strategy will be in top consideration for a company. Now we just come back to Pamela's introduction about both instrument. We can see that the money market would be a better choice for short-term business strategy compared with long-term capital market. Short-term instrument, money market has more flexibility for a company to manage the funds. This will be very important for our company to get enough cash flow, especially under the current slowing down of global economy. For money market, there are many advantages such as could be used for raising money for a short period. The interest tend to be lower compared with longer rate. This could meet our company's short-term needs to raise funds for business expansion. Although the cost of borrowing will rise while interest rates rise, we could use multiple financial types to offset this cost. Meanwhile, as the investor, we also can think about investing in the money market as it is very liquid. We can access the money when we need it. It's also safe when we invest in high quality investment for short periods. Although the returns are low, we still could use multiple financial types to balance the cost as we aforementioned. So, as for the long-term instrument of capital market, this is long-term debt and a fixed income security market. We could use this instrument to generate a dependable and stable income, but it takes too much longer time as it will last for up to 30 years. As a technology company or financial technology company, this industry has been changing rapidly because of frequent technology update. We can't have our funds being locked in this long-term instrument, otherwise we will lag them or lag behind the competitors and lost our business opportunity. Therefore, based on the above consideration and discussion, we strongly recommend using the instrument of the money market for a company's financial strategy. In terms of the money market research trained the three financial types. The first one, Australian Treasury notes. The second one, bank accepted bills. And the third one, negotiable certificate of deposit. Because of their similar interest rate, the lower risk, and the original maturity are all under 1 year. This will match with our company's short-term business strategy to catch up to the business opportunity as soon as possible. We will come up detailed analysis about each financial type and will be presented on the next boarding meeting. Thank you so much.